Welcome back to the Word Podcast. I am Seth Williams. I'm here with Brendan Ward. We are doing our quick segment called The Market Minute. We're going to cover everything you need to know about the Boston real estate market in 30 minutes or less. Everything to do with inflation, interest rates, inventory positions, and local market data. Brendan and Seth will cover it all. What is up, man? How are you?
I'm great. How about you?
I am great. How's my high def looking? Looking good?
Remarkable.
Cool.
Remarkable. I didn't even recognize you. It was so good.
It's the receding hairline comes in extra strong now, right? So, listen, we got a lot to cover here and not a ton of time. So we're going to try to keep it shorter today. I've been sick lately. Apologies for no Word podcast. Had some personal things going on the last couple of weeks, interrupted our rhythm, but I'm happy to be back at it here doing a market minute with you.
Very excited to be back. Lots going on in the market, so it's time to get it going.
Yeah, no doubt. So just a couple quick things. Listen, let's start with rates. Is that cool? So we've seen
perfectly cool.
We've seen mortgage rates. Good thing we skipped a week because they went up to 7.25% for a little bit of time, all on the backs of the debt ceiling stuff that was going on in the world. So obviously that deal has officially become law, suspending the AMX limit of the U.S. government here for some time, I believe for a couple of years, all while conceding to some budget constraints, which, as everyone kept saying in the news, nobody really won.
No, that's how you know it's a good deal. So as lawyers, we say, you've got a good deal if everybody feels like they got screwed.
Right. So, well, there you go. So I think that's how I feel. I'm sure that's how people feel. I think that's how the politicians feel. And I
feel like, why the hell is there a limit, right? Like, is it like the whole thing is ludicrous, right? Like, we all know they're just going to vote to increase it. Like, they're never not going to, because it will be like catastrophic. So why don't they just do away with the whole goddamn thing and just move on? Like, it is so stupid. We had 2 weeks to 4 weeks of roller coaster chaos hell in both the stock market, the bond market, the mortgage market. It was the hottest part of the summer market, and rates were flying up in the elevator. We're still on the escalator hoping they come down. We're not seeing them like drop as much as we would like. They're coming down a little, but not to where we were before the government, be it the Democrats and the Republicans, decided to screw everything up, right? So, like, I am agnostic to party. I am just generally overwhelmed at the incompetence of our government and the pure ability to be unable to have a reasonable discussion about anything that protects all of the people of the country.
That was one of those classic rants that I know will end up as a good reel where we'll try and find you some more haters if you don't have enough already.
I know.
Yeah, listen,
but
I'm sure there's some global economic reason why it cannot be suspended permanently. It probably has something to do with our currency. I'm no economist. We'll have to default to Marty on that, but let's just say that it's good news. And I think the market, to your point, has been in turmoil for the better part of a month now over this. And the closer
at
we got
least
to the deadline, more turmoil was gonna be there. So I'm happy to say that it's over with, right? Which is good. So
good riddance, debt ceiling,
and as
chaos.
Soon as that deal got passed the House and the Senate, we did see rates come down almost a half a point. They're still trading at about 6.9, 6.89 today. I think they will continue to be volatile. As soon as that cleared, we had another jobs report that, quite frankly, wasn't super great for the market or for the Fed specifically, stating that not enough jobs were lost, for lack of a better word. Or
counterintuitive that we're praying for bad jobs reports, right? Like, in a normal world, right?
We're just looking to see that softness in the economy, or at least the Fed is, and that's going to predict maybe halting on Fed rate short-term interest hikes, which therefore would help the market and potentially mean inflation's under control, which means mortgage rates would dip, blah blah blah, right? So,
But doesn't it
I mean,
mean
yeah,
that there wouldn't be jobs for our buyers, right? Like, don't we want people to have jobs so they can buy houses?
yeah. I mean, I think that was like a real lawyer comment, right? To hang on the facts there. Yeah, obviously we need jobs. They were just predicting some more job loss or less jobs created, and that was not the case. So, nonetheless, as soon as we got the debt ceiling stuff cleared up, the jobs report came in unfavorable to the Fed, and therefore created some pausing momentum of what would have been the debt ceiling change to mortgage rates. At least that's my take on it.
So the
On the
escalator is stopped. We're no longer
yeah,
in the elevator going up, but
it's
the escalator isn't coming down either.
it's just now it's just stairs, correct? Yeah. So
Okay.
I think that the further we get away from all of this stuff, and let me just check something real quick.
Yeah.
Release. The further we get away, I do expect some continued downward pressure in rates. So, and let me just check here. Do you know when the next CPI data release is?
I don't.
Oh, it's Tuesday, June 13th. So next week, right after our market minute, we'll see that CPI data. So I would expect that is the timeline when we see potentially some downward movement in rates. Hopefully, as long as, again, that's the one that we're predicting that housing data has cooled slightly, specifically as relates to rent, and therefore we could see a big drop. And I know this is so repetitive. We've been talking about this now for months, that the next CPI data release is the one that's going to solve rates. And I don't know if that's the case, but
So I want to ask a question then, being lawyerly, right?
mm,
If we keep saying the next one's the one, is it fair to assume that maybe the answer isn't going to be in the CPI index, right? So like maybe the CPI index is not going to be the holy grail for the Fed to start easing the rates,
I mean, it
right?
has to
Like
be.
maybe
It's the
does it?
only, it does, yeah. I mean, the only thing that they're judging all of this on is inflation data, and the reason they're continuing to raise rates is to make sure that this isn't like the 80s, where we thought it was under control for a hot minute and turned out not being under control, and then interest rates
Mm-hmm.
go to the double digits. So that's why they've continued to be um, bearish on everything, and making sure that they've raised short-term interest rates to combat the inflation data. And remember, the fact that we're trying to point out as part of the inflation data is about 42% of inflation data in that reporting. First off, it's trailing 12 months, so it's always the cyclical data. So the shittiest 12th month falls off, which the shittiest report was, March, was April, was May, was June. So we're halfway through that, where those are trailing off. So naturally, it's why inflation, it came down 100 basis points last report. 42% of that data is housing, and we know factually that rents are down, that there was a cooling again over the winter, and we also know factually that data lags. And so what I'm hypothesizing is any minute now, which what we thought was going to be 30 to 60 days ago, which hasn't happened yet, is that the housing information will come down significantly in the next or one of the coming up CPI data releases. It may not be June, it may not be July, but it definitely will be by August or September. It has to be. And so whenever that happens, I would expect there's significant downward pressure in rates. Hot take.
I hope so. I hope that you're right. So if I'm a buyer in Massachusetts, right? Because that CPI data is national housing inflation data,
Correct.
right? I'm a buyer in Mass, and then you as my agent tell me, well, that's great. The housing inflation is not increasing, but
Right.
in Massachusetts, maybe it's a slightly different story. Maybe when you tell me that we're going to look at an $800,000 house in Melrose, and I say I want to bid 795. Is there any inflation pressure on that $800,000 price?
I mean, sure. Listen, unfortunately, like we have to follow the global U.S. trend, the macro trend. If you're an economist out there, and still stay focused on the micro here in the market. The Boston market has remained very, very resilient. versus the rest of the country. And some parts of the country, like Arizona and out west, are getting completely crushed 15, 10, 20% down in home values. I mean, even around the Tampa area, which we saw a substantial increase last year, still an okay market, but there's starting to be a glut of inventory in and around these second home markets because people, as they've received other inflationary pressures due to rate hikes, their home equity lines, their car payments, whatever, the cost of groceries and normal goods, they've started to put those other luxuries on the market to recoup some cash. So listen, the market here locally, which I think was your point, is still super hot. There's still no inventory, which we'll touch on here in a minute. But still, you know, imagine what's going to happen when there's downward rate pressure, how crazy the market is going to get.
Here, especially. So if I'm a buyer in Massachusetts, I think what I just heard you say is I'm going to get more purchasing power because my rates are going to go down, but I'm going to be bidding up on places around here that are accelerating higher than other parts of the country.
100%. And in fact,
Okay. I
I'm sure
followed.
you know who,
See, I understand some of the stuff you say.
I'm sure you know who Barbara Cochran is from Shark Tank.
Or the Corcoran Group, which
Mhm.
was sold to NRT and is a part of the family of brands that owns Coldwell Banker, Corcoran Group,
Yep.
and a
So
couple others.
um,
Yeah.
I'm going to read you a quick quote from her. I heard on the either the Hot Sheet podcast or the Market or Knowledge Broker podcast I pay attention to. It was a great quote that came out about a week ago. I've been in business my whole life, says Barbara. Hold on, my phone is ringing here.
Yeah.
Which is this market, but what I can tell
Because the
you
market's hot.
is it's a good time to buy, because the minute rates go down, everyone is waiting for them to go down, even by a point. And when they do,
Barbara's been in
everyone's going to be
business her
rushing
whole
back
life.
into the market, and prices are going to explode, and you're going to be paying more for the same house anyway. So buy buy now, where maybe there's a little bit of downward pressure on price and is everything. So I've been in business my whole. That's right. See, oh DND. Sorry guys. I've been in
Mm-hmm.
business my whole life, and I've never been able to sharp some areas. Unlikely,
Mm-hmm.
condos are definitely a
Mm-hmm.
little bit softer. The single family market's really really hot right now, based off inventory. So yeah, get in the game, buy a house now, and yeah, you're going to see some substantial equity gains when rates do come down, which they will. They have to. By the way, in every recessionary time they come down. So again, I know it's tough out there for the clients that are losing offers already, for the buyers that are saying, "Hey, no, this is my cap. I don't want to go over X." The reality is, you're going to be paying over X anyway 3 months from now when rates do go down and prices continue to go up. And every offer that you lose sets a higher comp out there for the market, for the seller to go get more money. So it's going up
But
substantially, and I can't wait for Q2 and further for Q3 data to come out. I guarantee you, we're back to these double digit appreciation moments.
well, and I think you said something that really resonated with me the other day, in that all the people that were out shopping in March and April and May are now out of the market. So like they aren't your competitors. So if there are people on the sidelines, held there by the interest rates, and the people that are not affected by the interest rates that were shopping in April, May, in March, April, and May, they're out of the market. So your competition is like every week going down for the same amount of inventory. I thought that was mind blowing. Can you extrapolate on that a little?
I You lost me a little bit. So obviously, as people get their offer accepted based off more inventory,
Yeah.
competition is going to thin out. But at the same time, I think cyclically here in Boston, we have a lot of people on the 6-1 and 9-1 rental cycles. No one really wants to be moving in the summer, so the spring market's usually very, very hot. So I do think some people will pop out of the market as they get fatigued with the buying process and try and resume the market in the fall. And the reality is there's probably still going to be an inventory crunch, and you're going to be paying more for those houses then. Is that what you mean?
No, I thought I interpreted what you had said as that there are just less people to compete against with now in June because of everybody that got their offers accepted in March, April, and May, so that
Oh, I
you may
still
have
think
less
there's a
competition.
I
Yeah.
still think there's a backlog of buyers, and I just think that
Yeah.
as like for these last 2 to 3 weeks, inventory has gone up significantly, but it's still not enough. I mean, I think you can see that even in your and my own transaction volume to see the brash of deals that has started to come through is probably
Mm-hmm.
a result of increased inventory and maybe
Mm-hmm.
the super crazy strong offer you wrote in March or April was a little bit lesser strong in or it seemed really stronger in May because you were one of fewer offers on a specific property, but there's certain zip codes and certain towns that are still very um desirable.
In
And I do
demand.
think
Yeah.
that these last 2 to 3 weeks, some buyers probably got a little bit of cold feet. Again, we had some transactions where clients were getting cold feet because
Mm-hmm.
they ran their pre-approval. It was 6.5. 3 days later, it was 7.25, and they said, "This is ridiculous. I'm not going to move forward." That's the type of
Mm-hmm.
volatility that I think puts buyers on the sidelines, and it's why now,
Yep.
if you're a seller, you should put your house on the market so you can try and take advantage of the crazy tail end of the spring market, which I think will go on for another 4 to 6 weeks.
Yeah.
Good take.
Yeah.
I want
So
to.
what I've been hearing a lot of, and I wonder what and I think you touched on this a little, is the, you know, just neck turning pace that the suburbs are experiencing, and that the city is really slow, and that people are doing price cuts, and things that are not happening in the suburbs, right? Like
Yeah.
inventory is growing, price cuts are happening, and then a total opposite story in the suburbs, where it's like they just can't get enough inventory. Things are going day of first weekend.
Yeah, I just wrote an offer on a property that we unfortunately didn't get. There was 11 offers. It's over $1 million. Went 10-15% over asking, so a couple $100,000 over asking. That was yesterday, right? So, and again, it's one of those towns where there's 3 single families in the market, and there's only one that was nice, turnkey, ready to move in. Maybe you got to do some paint. So again, that same stuff is selling really fast. And on the flip side, yeah, we have some stuff that's sitting in the city right now. Um, and I do think the city is getting to a better place from a market condition standpoint where there's just a little bit more inventory to choose from. And the city hasn't experienced this explosion of appreciation that um, the rest of the suburbs have reached, right? So a lot of my clients are still working remote multiple days a week. They are looking for more space. More clients are commenting on the fact that they want privacy from neighbors, whether that be for parking, disputes, parties, whatever it is. They're looking for more and more space, and there's just not of that inventory. And that's all the things that you don't have in the city, right? So if you have all the clients saying, "I need more space, I need indoor space, outdoor space, I need additional parking, I want privacy." I mean, almost every product I sell in the city is a condo in a mid to high
Mm-hmm.
rise, which has
Mm-hmm.
none of those things. And the only outdoor space you have is communal. So I think for that reason, you're going to see more and more pieces of inventory sit on the market. And, you know, a lot of, I don't know what your take is on this, but a lot of the city product anyway is almost always paid for in cash or significant higher down payments. And I think with all of the volatility in the market, with people losing money in the stock market, maybe we'll see an influx of that as people try and move their assets out of this volatile state, out of banks and more into a stable asset like real estate. Not sure.
Well, and also knowing that if you are coming from a suburb that has four single families, and you have a single family, and you've been thinking about making the move, downsizers in Wellesley and Weston and Concord and Winchester. Now's the time to sell, and now's the time to buy in the city. Double your money in the suburbs. Buy something in the city, and
100%.
put the rest in the market.
Yeah, 100%. I completely agree with you.
Yeah.
I think it's a great point of view.
Because the suburbs are not building anything, like, and this is kind of that zoning piece, right? Like the suburbs are not building any appropriate inventory for older folks to downsize to and stay in the communities that they raise their kids in. So really your only choice if you want to downsize is to go into something that's already existing in the city. So like if that's on your mind, like don't wait around. Wellesley is not going to give you, garden apartments. They're not happening in Concord. They're not happening in
They're not
Winchester.
going to let you build ADUs, and they're not going to start building
No.
multifamily housing.
So sell the big house, call Seth, get it listed, and let's get you into the city. I think there's a nice Washington Street listing that would be ripe for a downsizer, right?
Yeah, it's a great place, and I think that's the point, right? Like, the city's just tough. There's starting to be a lot of inventory, so I don't know. We'll see what happens. I do think it's a great place to park your cash.
It's a deal. There's a deal.
In the interim, yeah, for sure.
Yeah.
Just quickly on inventory, we're still seeing almost single-family homes closer to that 4,000 number again. So remember, they were 3,000, finally hit 3,300, finally almost hit 4,000. We're trending right around that 3,700 mark, so it has increased slightly in the last couple of weeks. Again, huge listing week last week, and I think this week will be a huge listing week again. The further we get away from MDW, and I do think that we probably have 2 more weeks of inventory build before we start to see it sharply decline again as we get closer to the 4th of July, where everybody is going to the Cape, on a boat, at a beach, out of state, at the lakes, for the better part of 2 weeks. There's no upside of listing something heading into or coming out of the 4th of July weekend if you don't have to, right? And, the more you think about it, right, like kids or no kids, the summer's the time to relax. It's the time to see friends, it's especially around Boston. Great place to be in the summer. Can be really tough in the winter sometimes. Luckily, we've been, I think, luckier than most lately. But, I think people will wait till the fall, and they'll wait for some more economic stability. And for that reason, I predict a very steady market through the end of Q2 being June and the start of Q3 in July, because we'll have less inventory and also be very competitive, and rates should continue to go down.
I agree with you 100%.
Cool. 20 minutes.
Yeah.
Look at that.
Awesome. Our goal has been achieved.
Anything else you want to hit on?
No, I think we touched on all the things we wanted to talk about. Just listen to your agents, right? Like, end of the day, they're the professionals. They know what they're doing. If they're telling you that the market's hot in that area, listen to them and, keep doing what you do.
Yeah, for sure. Good take. And stay tuned. Again, if you're a buyer, we're going to be creating a 4-part mini series all about getting ready to buy and the things that you need to look at and get ready for as you become a buyer in the Boston area here, if you're not already one. So we're going to be recording that as a mini series here in the upcoming weeks, and we will drop that on the pod.
Awesome. Yeah.
Thanks for tuning in to another episode of the Word Podcast Market Minute. Everything you need to know about the real estate market in the greater Boston area in 30 minutes or less. Do us a favor, if you like today's content, give us the like, comment, subscribe, and make sure you share this podcast with a friend.